Alpesh Patel from Prifinium Partners joins us now to go through the papers. Morning, Alpesh.
Morning.
Let's start with China. Is it an about turn, a change of attitude?
It's a fantastic good news story, isn't it? God bless the communists for saving capitalism. It is very much a story about Chinese self-interest. For this reason, the Chinese have been diversifying their holdings of dollars anyway over a long period of time. So they have an interest in maintaining the euro and seeing a currency, not just the dollar, being of some significance. But also, remember, they hold some $2 trillion of American debt. So if they hold some European debt as well, as I say, it'll help diversify. And also, the EU is the world's largest trading bloc, equal in size to the US, and therefore incredibly important for China and future Chinese growth. The Chinese economy is only about half the size of the EU, so the EU is a very important trading bloc for them to support, and they've got the money to do it. So, as I say,
it could be good timing in investment terms as well, could it not? Because one could argue the Eurozone crisis isn't likely to get worse.
Yes, well, and we don't know how they're going to get themselves involved, but I suspect they're going to crack a really good, canny deal. That's what I suspect. And you're in a, as you say, the timing is perfect for them because you're talking to a distressed party where you can, I suspect, negotiate some outstanding terms. So I think, and good luck to them as well. Why not? They're the ones who've got all the money, and we're the ones in the Eurozone who need it. I think it's win-win. I think it is genuinely a fantastic good news story.
It looks as though we're going to find out much more about that in about 2 weeks' time when there's an EU-China summit. So we'll keep our eyes on that. Moving on then to the Financial Times, and I guess the question is big better? Is big best?
Well, you know what is going to be good is bonuses. And big bonuses, bankers will tell you, are definitely best. Try saying that in the morning. The reason bonuses are going to be bumper is because you've got the Facebook initial public offering, you've got this merger and acquisition. It won't be the only one happening, and that means big fees. However, what's interesting is this merger between Glencore and Xstrata will still be worth less than Facebook. Yet this company digs up very important commodities.
Makes money.
It makes money. It's been around for, well,
Sure.
Facebook does make money, but only makes $1 billion, whereas this company makes 16 times as much money, but it'll be worth less. So work that out. Perhaps you know where to put your money in future regarding that. But also expect the share price of companies such as Anglo American to go up, because what's anticipated now is that this combined group will start bidding for some of the smaller companies. Incidentally, this combined group, despite being worth $88 billion when combined, will only be the fourth largest commodity company in the world. Gives you some idea of how big commodity sector has become.
Well, indeed. And does it signal perhaps the top of the deals like this? When the deals get bigger, you start to wonder, have prices actually peaked? Have commodity prices peaked?
Well, haven't we been chastened by the banking crisis, as we were saying earlier, that some of these big deals we're now a little bit more cautious about, and not just saying, well, this is great, this is fantastic for the industry. It is instructive to note that ArcelorMittal has dropped something like 90% from its peak in terms of its share price, and that's the world's largest steel producer as a result of its merger between Mittal and Arcelor, and that's probably, again, a chastening lesson. So I think with this, let's be cautiously optimistic. The demand for commodities will, by all analysis, continue because of the growth in the global economy. However, bigger deals, we've learned from the past, do sometimes unravel and cause problems. So cautious optimism. But I think it is a good news story, not least because bankers will make more money.
Oh, good.
There'll be an interesting battle, I suspect, also between these two characters, the two heads of the companies who are childhood friends from South Africa.
Can you believe it? They were at school together and they've become multi-billionaires together.
And now they have to run a company.
That's going to be
the
only
really
had friends like that from
interesting
school.
Okay, yeah.
The
Or friends like that at all, frankly.
Independent and bonuses.
Yes, well, Barclays. Now I'm going to take a slightly different view to the Vox Populi on this, in that Barclays isn't state subsidised, and we're not living in a socialist country, even if we're asking in the EU for bailouts from communist countries, and it's no business of the government if shareholders want to pay fat bonuses to their employees. The workers are winning, and if the shareholders getting stuffed because they're overpaying their employees, so be it. But I don't see why the Prime Minister needs to get involved, and it's not been clear whether he will, but get involved on bonuses again. It's not a state-owned company. It's none of his business, and everything isn't the business of government.
And you've seen them, basically, the politicians sort of dithering, haven't you, this week? You've seen them wanting to get involved and sounding good and on the side of popular opinion, but at the same time realising the limitations of how far they should get involved in.
Probably
in
realising the
private
limitations of their own intellect, because it's not a simple issue as all bonuses are bad. At some point, in a private company, you've got to leave it for them to run, but it doesn't sound well when people are losing their jobs to be saying, well, I'm all in favour of other people earning some money. We've got to end the envy part of it and actually say it's a shareholder issue, it's not a government issue.
Well,
get off our backs.
Is this not the case? Obviously, when you have a free market economy. However, there is a big question mark over how free market economies will be in coming years, given that you could argue that that's been our undoing.
Yes, you could argue it's going to be the end of capitalism, but I think not quite yet.
That's not what I said. I was moving very carefully around that.
And there is a danger of over-regulation, which then leads to less and less freedom on the capitalism side. I think it's a far bigger issue than the Barclays part, but given how quickly Barclays and the other banks have rebounded and how much profits they're making and therefore tax, arguably not paying enough, well, none of us are paying enough given the debts the governments are in, but these are now very profitable entities. Barclays over £1 billion in profits last year. That's after paying their employees and national insurance and all those other things. So I don't think we're going to start going down the Chinese model, albeit we're asking for their bailouts, and it's not been too bad a model for them.
With money comes politics, right?
Absolutely.
Now, terribly disappointing today. We're continuing with a good news theme, aren't we?
Great news story.
Apple, all things good there.
Yeah, well, I declare an interest. I do own some shares in Apple, probably only enough to buy a couple of granny. Yeah, probably, exactly. Now, I've been looking at the statistics. If you owned Apple shares 10 years ago, they've gone up 50-fold. That means $10,000 have become $500,000 in 10 years, and you probably didn't get that from your bank bonuses or from salaries or anything else. It's just by passively buying Apple. They've just taken over hardware and software out there and removed this Microsoft hegemony which existed. And the great thing about them is that the shares are still, I speak objectively, not as a shareholder, still relatively undervalued, is what the analysts are saying, because they're generating so much in earnings, and I believe it's still now the world's largest company. It hit that peak when Steve Jobs was alive, and I think it's still there as the world's largest company.
In the last 10 years, it's been quite an extraordinary story. Amazing. For a company that was around a lot.
Because we all buy their products.
Yeah, there we go.
Now, going back to another extraordinary story, Facebook, but this time the artist who was asked to decorate the early offices of Facebook, probably for not very much at all, he took his payment in company shares. What a clever chap.
We heard about these stories about 10 years ago with the dot-com boom. If you remember, all the secretaries were getting their payments in shares. In the UK, we've got something called Tech City, which is like our little Silicon Valley. If you're out there today, unemployed, go to Tech City, go to some of those startups and ask for odd jobs and ask for shares in return. You might just hit the lottery jackpot.
I'm off there right now.
Alpesh, thank you. From Alpesh, Tanya and me, thanks very much for being with us. That was quite